2020 has been the worst year in the history of the oil industry. The sharp decline in the price of oil led to oil and gas stock prices hitting 10, 15, and in some cases even 20-year lows. This collapse compounded with existing negative sentiment around investing in fossil fuels, making many investors not want to touch these stocks with a 10-foot pole.
The oil market is insane. We're in the death knell phase. I'm done with fossil fuels. They're done. Sell. And that's how I feel about the oil and gas stocks here. I think that these are on the other side of history, so to speak.
And that is just the tip of the iceberg. If you've been following the channel, then you know I've made significant investments into this area over the past few months. In fact, the energy sector now makes up 23.8% of my long-term dividend stock portfolio. I invested heavily in ExxonMobil, which I've discussed in previous videos, but I started to realize I had a hidden gem in my portfolio I was neglecting. This gem was Enterprise Product Partners, stock ticker EPD, which is an American midstream natural gas and crude oil pipeline company based in Houston, Texas. What caught my eye here is that the stock price saw a similar decline as other oil giants, but the company's financials fared much better. This was due to the company being far better diversified and having crude oil being a smaller part of the business. In this video, I'm going to provide a full stock review of EPD and explain why the oil and gas sector will rise in 2021. My name is Zach, and you should leave a like and subscribe to the channel if you enjoy the video. You should never invest in a business you don't understand. So in this video, I'm going to provide a full picture look at the business and stock history of Enterprise Product Partners. The company was founded in 1968 as a wholesale marketer of natural gas liquids, commonly referred to as NGLs. They first constructed pipelines in Mount Belvieu, Texas. EPD would continue to construct new pipelines and make acquisitions in this sector, eventually spreading throughout much of the US. By 1998, Enterprise Product Partners went public on the New York Stock Exchange under the ticker symbol EPD. Over the next 2 decades, EPD would make many more acquisitions and prove to be a serious player in the oil and gas sector. On the company's website, they have a very detailed history, but I thought it would be boring to include for the purposes of this video. I provided a link down below in the description if you're interested in learning more. So what does EPD's business look like today? It's diversified across 4 main segments: NGLs, crude oil, petrochemicals and refined products, and natural gas. NGLs make up 51% of EPD's gross operating margin as of September 2020. NGLs are components of natural gas that are separated from the gas state in the form of liquids. These liquids are valuable as separate products with applications throughout the entire economy. For example, ethane has many uses. Direct applications include plastics production and petrochemical feedstock. If you were wondering what petrochemical feedstock is, it just means raw materials fed into an industrial production process to yield a different end product. End-use products of ethane include food packaging, prosthetics, water pipers, medical tubing, insulation material, textiles, hygiene products, detergents, antifreeze, and much more. Propane is directly used for heating, cooking, crop drying, vehicle fuel, and petrochemical feedstock. End-use products of propane include consumer electronics, strong packaging, PPE, pharmaceuticals, molded parts, carpets, upholstery, films, helmets, and diapers. Butanes are directly used for bottled fuels, gasoline blending, propellant, refrigerants, and petrochemical feedstock. End-use products include fuel additives, lubricants, and specialty additives. C5 Plus is another NGL that's directly used as a diluent, petrochemical feedstock, and for gasoline blending. The end-use products of C5 Plus include tires, synthetic rubber, paints, textiles, sporting goods products, and specialty chemicals. The primary growth driver of this segment is exporting NGLs to emerging countries and petrochemical feedstocks. Additionally, the customer quality in this segment is high, with 80% being investment grade or backed by a line of credit. Ensuring customer quality is a large focus of enterprise product partners because this increases the reliability of cash flow. Since NGLs are such a large part of EPD's business, this has allowed them to be less affected by the low 2020 oil prices. I'll go into greater detail about this when I discuss the company's financials as a whole later in the video. Crude oil is the second largest segment of EPD, making up 24% of their gross operating margin as of September 2020. This is refined to produce gasoline, heating oil, kerosene, jet fuel, asphalt, lubricants, synthetic rubber, plastics, rayon, nylon, resins, and much more. Specific growth drivers in EPD's crude oil business is increased demand for low sulfur light crude. This burns cleaner and produces lower sulfate emissions. Once again, the customer quality is high, with 85% being investment grade or backed by a line of credit. Petrochemicals and refined products make up 13% of EPD's gross operating margin as of September 2020. This segment involves the refining and processing of the end products which I described previously. Specific growth drivers include consumer behaviors, which are leading to greater demand for petrochemical products. Over 70% of the customers in this segment are investment grade or backed by a line of credit, making customer quality high once again. The smallest segment of EPD is natural gas, which makes up 12% of gross operating margin as of September 2020. This is used for electric generation, heating, cooking, vehicle fuel, and industrial fuel. End-use products include fertilizer, paints, coatings, glue, and more. Growth drivers include the transition away from coal to natural gas for stable electric generation and industrial fuel. Customer quality was a focus once again, with over 65% of customers being investment grade or backed by a line of credit. Alright, so that should give you a good idea of Enterprise Product Partners' current operating segments, but now let's take a look at the business as a whole. In the long term, energy demands are going to continue to increase. The global population is expected to grow to 10 billion by 2057. Additionally, much of the developing world will continue to advance. This is best shown by the Human Development Index, which measures human progress in terms of health, education, and income. A strong positive correlation exists between HDI and energy use per capita. One clear example of this is high population nations such as China and India seeing significant increases in energy consumption per capita as their HDI increases. This correlation is likely to continue as all nations advance. Overall, energy consumption will increase dramatically over time. According to the EIA's 2020 International Energy Outlook, fossil fuels are still expected to dominate global end-use energy consumption by fuel in 2050. Petroleum decreases from 42% to 37%, and natural gas increases from 20% to 22%. It's important to mention that this is based on percentage and leaves out the context of overall energy consumption growing 37.5% by 2050. Even though petroleum's share of energy consumption decreases, its raw numbers still significantly increase since the overall pie has grown so much. This is one area that I think people often overlook or misunderstand when they analyze the future of fossil fuel. Now, I know that climate change is a big factor for many investors, and some wouldn't invest in fossil fuel companies under any circumstances. However, we need to be realistic that these fuel sources are not going anywhere anytime soon.
How dare you!
They are the backbone of our modern society, and frankly, the economy is heavily reliant on them. Just think back to all the uses I mentioned earlier. I could honestly make a 30-minute video just detailing the long-term future of fossil fuels, but that's not my goal here. If you want to learn more about the sustainability of Enterprise Product Partners, then I suggest you read their 2019 to 2020 sustainability report. I will provide a link to this in the description below. Alright, let's dive into the short-term problems of the crude oil business. In 2020, the price of oil tanked, even going negative for a brief period of time. Demand plummeted as much of the world entered into an economic shutdown, causing a massive oversupply of oil, thus driving the price down. On top of this, Russia and Saudi Arabia entered an oil price war as both countries refused to lower oil production, exacerbating oversupply and lowering prices even more. Since June, the price of oil has been hovering around $40 a barrel and more recently growing to $45. Oil is a commodity business, and thus its performance is reliant on price. The price is purely determined by supply and demand, how much oil is produced and how much is consumed. Throughout this year, oil companies have made significant production cuts, but these take a long time to realize in the market. Additionally, demand is still recovering from the economic shutdowns and won't fully recover until vaccines are widely distributed. Luckily, this vaccination will largely occur in 2021, and demand should return to higher levels. The production decreases will kick in, and with decreased supply and increased demand, prices will rise. This is not even taking into account the factor of inflation, which many think could be significant from the wild money printing that's happened during this year. I think oil prices will return to profitable levels in 2021 and could even hit relatively high prices over the next few years. I can't tell you exactly when the price will recover, but I know it will. Just look at the price of oil historically. Every time there's a large downswing, the price eventually rebounds to profitable levels. Global oil producers always move production levels to sustain business. Let's take a look into EPD's crude oil business specifically. This chart shows the break-even prices for their various locations. The break-even price changes depending on the location and the quality of the well. For high-grade wells, the break-even price ranges between $20 and $40 a barrel. For average quality wells, the break-even price ranges between $30 and $55 a barrel. Based on these prices, it looks like EPD's crude oil business should return to profitability in 2021. However, if you remember from earlier in the video, this segment is only 24% of EPD's gross operating margin. This means that they are far less dependent on oil prices to be successful as a company. This becomes obvious when you look at the company's financials. Over the past year, gross profit, operating income, net income, and earnings per share are all in line with 2019 numbers. However, the stock price still saw a major decline like other oil stocks. In my eyes, the market was valuing EPD as though they were suffering as much as oil-dependent companies. This was not the case though. Enterprise Product Partners is a very diversified business and has proved to be resilient to oil price fluctuations. This is shown through their historical data. Over the last 10 years, the company's gross profit has grown from $2.29 billion to $5.73 billion, giving it a 9.6% compound annual growth rate. This trend is similar for both operating and net income. In this same time, the earnings per share has increased from 58 cents to $2.09, giving it a 13.6% compound annual growth rate. According to EPD's Q3 quarterly report, the company has averaged a 12% return on invested capital over the last 10 years. At the current stock price of $20.76, the PE ratio is 9.59, which is incredibly low in this historically highly valued market. The EPD dividend has seen 21 years of consecutive dividend growth with a 4.18% 5-year compound annual growth rate and a current 8.85% dividend yield. Its payout ratio is currently 84.88%, which is quite good given the conditions of their industry. I actually have no concern over EPD lowering their dividend and expect them to continue increasing it barring some unforeseen circumstances. EPD will soon become a dividend aristocrat, meaning that they have increased their dividend for 25 plus years. An investment in EPD right now locks in an incredibly high and stable dividend yield and provides potential for capital appreciation as a recovery play in 2021. Another positive aspect of Enterprise Product Partners is their leadership. The management of the company owns 32% of the common units, which is significant. This means that the management's interests are in line with the shareholders. If you're planning on investing, it's important to mention that EPD is an MLP, which stands for Master Limited Partnership. An MLP is a limited partnership whose interests, known as units, are traded on public exchanges just like corporate stock. Owning units in an MLP is different from owning corporate stock in a number of ways, most notably their taxation. An MLP, like all partnerships, is a pass-through entity which pays no tax itself. It is treated by the tax code not as a separate entity, but as a collection of partners. Each unit holder is allocated on paper a proportionate share of the MLP's income, gain, deductions, losses, and credits. This is reported annually on the K1 form. Now, I'm no expert on MLPs, and I'm still learning about it myself. I've heard both positive and negative takes on how it can impact your taxes, so be sure to talk to a tax professional if you have any questions. Also, I will provide a link in the description of this video to a resource that describes MLPs in detail. EPD is one of my holdings in my long-term dividend stock portfolio. Currently, I have 75.25 shares with a compounded dividend yield of 9.35% and a cost per share of $19.89. My plan is to pick up more shares whenever the price is below my cost per share. In fact, I've already put orders in during the making of this video. I think EPD is a great opportunity in the energy sector and offers a fantastic yield on cost in the long term and capital appreciation in the short term. However, don't take my advice blindly and be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. I greatly appreciate if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. You can support the channel over on Patreon and be a part of making these videos happen. The link is in the description. Please leave a comment below and thank you for watching.